The crypto markets, they've lost about $1 trillion in just the past few months as enthusiasm has quickly faded for this sector. The conversation has really shifted from how to navigate the volatility to whether you should be touching cryptocurrency at all. Let's bring in our expert panel. Crypto expert, Skybridge Capital founder Anthony Scaramucci, executive director of Duke's Law Global Financial Markets Center, Lee Reiners, and co-founder and partner of JST Capital, Scott Freeman. Gentlemen, thank you all for being here.
Thanks for having me.
So, Lee, I got to start with you. Last time we were here, you coined the phrase crypto Yonkers. It was you kind of making fun of the idea of crypto Bahamas. And metaphorically, it seems like we're in a very different place from crypto Bahamas. Have we reached that point of crypto Yonkers, as you mentioned last time? And how do you see crypto investing going from here?
I think we've reached that point, Frank. So start to book your hotel. I mean, listen, as Kate just said, crypto's problem, there's many right now, is that it's finding a hard time attracting new buyers. And in essence, the entire space operates like a giant Ponzi scheme where it takes new money to pay out old money. And unfortunately, it's always the people who can least afford it who are left holding the bag in the end. And that's exactly what you're seeing right now, just absolutely heartbreaking stories of, everyday Americans who have lost, in essence, their life savings. This was entirely inevitable, though. I've been saying this for a long time, that crypto has no inherent value. And so when you look at, where's the bottom, obviously crypto has only existed in a zero interest rate monetary policy environment. So as the Fed continues to raise interest rates, I expect crypto will continue to go down. In long term, Frank, in order for this asset to have any value whatsoever, it has to provide genuine economic utility. It can't just be a means to speculation. And we're 13 years into this experiment, and I have yet to see that so-called killer use case when it comes to crypto and blockchain. And you have to wonder, will we ever see it?
All right, just for our viewers who may be just joining right now, Crypto Night in America right now, we're following two big breaking stories. One, FTX looking to acquire BlockFi. The second one, Voyager Digital, having some liquidity issues, not allowing any trading or withdrawals. Anthony, I'm going to come over to you. These liquidity issues, what do they say about the broader cryptocurrency market and the investability of cryptocurrencies?
Well, Frank, unfortunately, there are no new mistakes. And so we saw this in 1998 with the long-term capital management crisis. We saw it in 2008. And listen, there's a lot of people that were over-levered in the system. They were overzealous. There was double collateralization going on. It was almost like Bernie Madoff got married to long-term capital management, and they created Celsius. And so some of this stuff is terrible, frankly. But I do think that Lee's ultimately going to be wrong because the use cases are proliferating, and there's billions of dollars that is moving into the space. And of course, we haven't gotten to Sam Bankman-Fried, who's been willing to backstop the space and put up capital. So lots of smart money there. It's not crypto Yonkers. In fact, crypto Bahamas. I just got back from the Baha Mar Hotel. We'll be doing that April 17th to April 20th. And hopefully Lee can come down and make the bear case for us again. But I think he's going to be wrong long term. This is just part and parcel of a long-term trend and cycle. And of course, we have the halving coming in February, March of 2024.
Scott, I'm going to come over to you. I mean, again, not a great sign for Voyager Digital to say no trading, no withdrawals, and no deposits.
Yeah, it's been a brutal market for crypto for the last 3 to 6 months, right? And I agree with a lot of what Anthony said, that we've seen a lot of these problems before in traditional markets. So we believe there are some great use cases out there. We think the market will continue to grow. Crypto is a volatile asset. It's always been a volatile asset. It will always be a volatile asset. And I think people need to be very careful when they get into crypto. You need to expect aggressive ups and aggressive downs and be able to navigate it. But a lot of the problems we're seeing today are problems that are just typical of growing ecosystems, but of finance in general. The problems with Celsius, the problems with Voyager, the problems with 3AC, the problems with Babel. There's a whole list of them about liquidity events or challenges managing risk. These were risk management challenges. These weren't crypto challenges. It was affected the crypto ecosystem, but these were all challenges of people mismanaging risk. And unfortunately, retail folks are going to get hurt.
So, Anthony, back over to you. You mentioned Sam Bankman-Fried. What do you make of the fact that he's the person, as you mentioned, that seems to be backstopping the entire cryptocurrency industry, and it doesn't seem to be anybody else racing out to buy BlockFi? He seems to be the one that has the interest and believes that it is a valuable asset.
Well, first of all, a big shout out to the BlockFi people who focused on depositors first. They took a deal from Sam. It may not have protected the equity there, but it's certainly protecting the depositors. I think in Sam's case, he's looking for customer acquisition, and I think he sees this as a broad opportunity to get those customers through BlockFi. And BlockFi, by and large, other than the fact that they were over-leveraged, they ran a pretty decent company. Remember, somebody mentioned Bear Stearns. Bear Stearns had the liquidity. They just had a liquidity mismatch in the short term. Same with Lehman Brothers. And so somebody like Sam stepping in here, I think, is providing the context for a bottom. And just a quick correction, when I said Celsius, I meant 3 arrows as it related to the potential fraud.